Welcome back, folks. Today we're going to talk about the last meeting that the Federal Reserve Chairman Jerome Powell had on March 20th. And the whole press conference they had was like an hour long. So what I'm going to do is give you a brief recap with some video clips of things that were discussed, things that I think are important. So first of all, the Federal Reserve Chairman decided the Fed decided to leave the interest rates unchanged. So I took some notes, so let me share those with you. The Fed decided to leave the interest rates changed from 4.25 to 4.50%. Now that's the Fed funds rate. That's not the interest rate that you would pay for a mortgage when you do get the mortgage loan. The Fed talked about that these are times of great uncertainty due to, obviously, tariffs and all the 100 plus executive orders that President Trump has introduced so far. So it's an understatement that it's a time of great uncertainty because Fed is having to battle what the Trump's executive orders and these tariffs and the impending tariffs that are coming. So let me show you a video clip about the unemployment that the Fed is projecting. They're saying that the unemployment rate will remain steady at 4.2% for the rest of the year, actually for the next 2 years. So let's listen into the clip.
The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years.
Okay, so apart from the unemployment, the Fed talked about the inflation that they're expecting. And they think that the tariffs and the conversation surrounding the tariffs is going to be driving the conversation around interest rates and the inflation that's coming up, or expected inflation that's surrounding or weighing heavy on people's minds. So let's listen into that clip as well.
Volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor.
And once again, the Fed projected that the inflation for 2025 is projected at 2.7%, and for 2027, the Fed expects the inflation to reach the much coveted goal of 2%. So that's based on the PCE, personal consumption expenditure, that the Fed projected in their meeting. So let's take a snapshot at their PCE inflation chart analysis.
Consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective.
And then finally commenting on the government regulations that are impacting the whole conversation about inflation, the Fed commented on that government policies on trade, immigration, fiscal policy, and government regulations that are impacting the conversation about tariffs. Let's listen on that video clip as well.
Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high.
And in the question and answer session, Fed chairman was asked how much inflation can be attributed to tariffs. Obviously, the Fed chair was very honest that you cannot say penny for penny that this tariff contributed to this much inflation. One of the examples that Jerome Powell mentioned was that tariffs were imposed on laundry machines, but the dryers also went up in price. So it's very hard to attribute penny for penny but if there's tariffs on one item, any related items will also experience some sort of spike in their prices, thus causing inflation across the entire category or commodity. And then there was some talk about retaliatory tariffs because as President Trump has announced that there will be tariffs on Canadian goods, Mexican goods, Chinese goods coming in, Indian goods coming in, there will be retaliatory tariffs that the Canadian government has talked about, the Mexican government has talked about, even Venezuelan government has talked about, even the Chinese government has threatened to impose retaliatory tariffs. So there was a very detailed question about retaliatory tariffs, and let's see how Jerome Powell commented on that in response to that question.
You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens, it will be complicated, and there will be some retaliation and some not, and all that, but ultimately they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain but better informed forecasts. So yes, that's in there.
So in a nutshell, the entire press conference revolved around the tariffs. You can see that the impending conversation about tariffs and the tariffs that are being imposed on different imported goods is weighing heavy on the minds of the Federal Reserve District governors, and obviously the chairman is having to battle that, and the whole economy is undergoing a lot of uncertainty as more and more tariffs are being levied, and how different suppliers, importers are adjusting to that. So with that said, please like, share, subscribe, and we'll bring you more pertinent financial news as they become available. Thank you for watching.